All views or information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business, and you should never trade with money you cannot afford to lose. That being said, let's get right into the weekly analysis. First up, we have the EURUSD. The bias on this pair is neutral. I'll just walk you through the relevant event areas. We have resistance here at 14170 thereabouts. We have support here at 11860 and support here at 11455, creating what I call a support zone. We have resistance, which is the top of this consolidation period, turn support here at 109.899. Clearly we can see that price has broken through this previous resistance just here and has continued to break through previous resistance here at 11455 and has since been rejected at 114,173, creating a new event area. This is also resistance on the weekly chart. This is not a pair that we want to be trading in at the moment, of course. We're just in the middle of this very choppy sideways movement here in between the two support and resistance, essentially vacillating between 11455 and 114,173. So there is nothing to do here. It all comes down to whether we get a sell signal at this resistance, another rejection of this resistance, or in fact we get a buy signal from here, the support, or within this support zone. Then we look to buy, and we would simply at this stage trade it as a range bound trade, but it'd have to be a significant buy or sell signal for us to warrant taking a trade on what is a very choppy pair at this point. So we'll wait and see as the week unfolds. We'll see on the daily time frame what price prints, and if we do get a buy or sell opportunity, I will let you know. Thank you. Next up, we have the British pound US dollar. The overall bias on this pair is mildly bearish. Now myself and my private mentoring clients are in this trade. We've been in this trade prior to starting the channel, and we are short on this pair. So I'll just take you through the relevant levels. Like the Euro USD, it is trapped in this range bound zone between resistance of 127,983 and support around 122,018 or thereabouts. We can clearly see that price broke through previous resistance here at 126,343 through this area. It broke up. This is a false breakout. It resulted in this bearish pin bar forming, creating a new swing point, a new resistance area. Since then, we've had this beautiful looking bearish pin bar just here, a reverse bearish pin bar at that, which is how we entered the market, which of course resulted in price capitulating back down to create some minor support around this area here. Since then, obviously, price has gone back up. We have another bearish pin bar here, even though it's a bullish body, it's a bearish pin bar, and as I'm talking to you now, price is retesting this 126,343 resistance. So it's all going to depend upon whether this 126,343 resistance can hold. If it does, then we could see price capitulate back down. If it doesn't and breaks through, then of course we could see price retest overhead resistance at 127,983, which of course will simply give us a better selling opportunity should we get a sell signal at that level. So from a price action perspective, again, we are short in this trade. We'll wait and see what happens at this 126,343 resistance. But just to repeat, should price break through that and continue its journey north, then we'd be stopped out of our trade, but that would give us an opportunity, should we get a sell signal, to be able to sell on greater strength up here, and we will retarget our take profit down here at the of the consolidation period of 122,018. So at this stage in the short term, the bulls are in control. but it's all going to hinge upon this resistance zone, if you will, between 126.343 and 127.983. As soon as I find a signal to go short, should one present itself, then I'll be sure to put that in the channel, and we can all take advantage of it. Thank you. Here we have the Aussie dollar USD. The bias on this pair is long. Clearly we are in an uptrend. We have support here at 64096 or thereabouts. We have previous resistance turned support through this breakout candle here at 66753. We have support here at around about 67712, and of course we have resistance up here at 70616. From a price action perspective, we are looking to take advantage of a retrace. So we're simply looking for a pullback around support here at 67712 or 66753. As long as price stays contained above this 66753, this is the line in the sand for the bulls, then we'll have a long bias on this pair. So there's nothing to do here. As you can clearly see, the price is just slowly grinding back up, but essentially in this kind of sideways. This has not formed into a range bound zone. So we'll simply, in this instance, we're going to wait for a retrace, a pullback, so that we can buy on weakness, and we will retarget at some point, should the opportunity present itself, 70616 or thereabouts. So wait and see game, nothing to do on this pair as yet, but again we will take advantage should we get a pullback or a retrace or a dip above this 67712 or around this area here, this support zone, then we will go long, again retargeting 70616. Here we have the New Zealand dollar, US dollar, and like its counterpart, the Aussie dollar, US dollar. We can clearly see we are in an uptrend. We have previous support here at 59202 thereabouts, which was the bottom of this consolidation period. We had resistance turn support being the top of this consolidation period, 61525, again through this breakout candle here. Obviously that's a confirmed breakout. We then have resistance up here at 65749 in the form of this bearish pin bar just here, and we have support at 63881 or thereabouts, which really is the bottom of a new consolidation period through here. So of course within every trend we have a consolidation, which is the market catching its breath. After consolidation, of course, we then have another breakout, and more often than not that breakout is in line with the dominant trend. So I would expect price to break out above this consolidation period here. What we see here, we have an inside bar structure which could very well be the catalyst for that breakout. As I'm talking to you now, the last 2 trading days and indeed today, price is hovering at this overhead resistance just here. So if we get a clear breakout, it would need to be a confirmed breakout, not just a close above it. We'd want to have a confirmed breakout, but by maybe 1 or 2 candles after the close above this resistance area, and then we would take advantage of that and go long, and we would target the next obvious overhead resistance, which is 67500 based on the weekly time frame. So we do have an opportunity, not yet, but potentially have an opportunity to go long should in fact we get a close and a confirmed breakout from this resistance area here, probably in the form of an inside bar setup. So there's no trade on here yet. There's nothing to indicate that we should be entering the market just yet, but it certainly is on my radar, and as soon as I get a confirmed breakout, then we will be going long, provided we get the signal. Again, probably in the form of a continuation signal in the form of an inside bar setup. Then we will retarget 67500, which is overhead resistance on the weekly time frame. Thank you. Traders, next up we have the US dollar Japanese yen. There is no overall bias on this pair. Clearly it is still stuck in a long-term range-bound zone, but that still gives us opportunities. So I'll take you through the relevant areas. First of all, we have this resistance zone here between 109.678 thereabouts and 109.359 through here and through here. We have previous resistance, which is the top of the consolidation range at 108, 107 through this area here, and more recently here, confirming the top of that range. We have a number of support areas here. We have support at 106.798 through here, more recently here, and through this bullish pin bar here. And we have support here at 106.550 or thereabouts through here and through here. And we have lower support down here at 106.023. Yeah. So from a price action point of view, what we are looking to do is to take advantage of this trading range, if you will, between 023 and 107. So a lot of pips on offer, as I've mentioned before. There is nothing to do at the moment. We do have this inside bar false breakout through a bullish candle, breaking through the EMAs and bang on previous support, which resulted in price capitulating back up to the top of this trading range at 108, 107. And since then, of course, price has capitulated back down. So in moving forward, what I think we can expect is for what we're looking for rather is a buy signal somewhere in this support zone between 106.798 and 106.550, or even lower down here at 106.023. Time will tell, but I'm looking for a buy signal. It would have to be in the form of a very bullish pin bar or a sucker setup that will allow us to go long, and our first target will be 108.107, but potentially if we get a close, we did here through this breakout, if we get a confirmed close and a confirmed signal after that close, then we will retarget 109.359, and we may pyramid our positions into 109.678. So for now, there is again nothing to do on this pair. A lot of pairs are range bound as I'm talking to you, but this will give us an opportunity at some point. There will be a breakout, and when that breakout comes, there are lots of pips on offer on this pair, but this is a very, very patient pair to trade. There is nothing to do here. You don't want to be on this pair right now, but as soon as we get a buy signal, which is my intent, my bias, then we'll take full advantage and retarget those various overhead resistance areas that I spoke about before. Thank you. Next up, we have gold. Gold has been great to us over the last few months. Clearly, we're in a very, very dominant uptrend. I don't need to tell you that, but I'll give you the relevant levels. Of course, we have resistance here at 1743, 11 or thereabouts, which was the top of this. We have a clear break. We then have resistance turn support at 1764.53, and then of course we have the recent high, recent swing point or event area of 1815.98. So we're going to continue to take advantage of this uptrend. So from a price perspective, we are simply going to wait for a retrace somewhere around this 1764.53. Right now, as long as gold stays above this area here, then the bias is very bullish indeed. And in fact, our first target would be 18 thereabouts, but we would be looking towards 1900 and beyond that even. So for now, there's nothing to do. We're going to wait for a retrace. We're going to continue to buy on dips so that we can buy on weakness and retarget first of all this overhead resistance here. So we're just looking for a buy signal somewhere around here or in between resistance and support, provided we get the risk to reward to take full advantage of this very dominant uptrend that we are experiencing with gold for quite a long way to come yet, in my view. So nothing to do here. There is no trade in play on gold as yet, but we will be trading gold. We'll take full advantage of the dips as they present themselves, provided we get a buy signal, one of the three that we're looking for. And when that presents itself, I will present it to you. And again, we'll be going long. First target 18.15, but then we'll be targeting 1900. Should we get a break above, a close above that, again, we could pyramid our position to take full advantage of overhead resistance at a 1900 area. Thank you. Next up, we have crude oil. The overall dominant bias on oil is bearish. We have the relevant areas here. We have resistance at 41.03 or thereabouts, just here, and I'll just draw that for you guys. And we have support here at 34.68. Now this area here was the prior gap area on the 6th of March. This was the top of the gap area. On the 9th of March, this was the bottom of the gap area. So what we are looking to do is wait for a sell signal, should one present itself, at this resistance right here where price is hovering now at 41.03 or thereabouts. You can see that all these candles here, how small they are. So that is a clear sign that this short-term upward thrust is running out of steam, and in my view we can expect the bears to be well and truly control at some point, and we'll take full advantage of that. So from a price action point of view, we do have support down here at 31.26 through this area here, and we have previous resistance turn support. If you zoom out of your charts, you'll clearly see that at 28.68 or thereabouts. So we are looking for a price action sell signal at around this resistance area right here where price is hovering now. That would need to be in the form of a very bearish pin bar, or in fact a sucker setup, and we would take full advantage of that, and our first target would be 34.68, but we would definitely pyramid our positions. Should we get some downward momentum, depending on the size of the candles, we would pyramid our positions down to 31.26 and then down to 28.68 and even lower from that point on. I do believe oil has a lot of downside to come. It's just a matter of waiting for that opportunity to present itself, but when it does, we'll be all over it, and we will short oil again, initially 34.68, 31.26, 28.68, and then beyond. But that's yet to play out. But from a price action perspective, everything indicates that we are on the verge, if you will, of having a price action signal or some event area, some rejection of this resistance to go short on oil. So as soon as that happens, I will let you know. Thank you, traders. Traders, here we have the S&P 500 cash. The short-term bias on this pair is bullish indeed. We have support here at 2772 or thereabouts. We have support here at 3985. We have this resistance zone at 3153 and 3230 accordingly. From a price action point of view, now that we have a break above this previous resistance here of 3153 in the form of this multiple, that will open the floodgates to 3230. In fact, you can see today, being Monday, the gap over the weekend. So price, you would think, was going to head to 3230. We won't enter at this point. Once 3230 has a confirmed close above it, which was what we're looking for, through not just a close, but some confirming candles after that close, then our next target will be overhead resistance at 3393. So there's no action to take right now, but I'm looking for a close above 3230, a confirmed close above through 1, 2, 3, 4 candles after that close. Should we get a buy signal in the form of a inside bar structure, because it's a continuation signal, or a rejection through a false breakout back below this level here, then we'll be going long and we'll be targeting 3395 in the first instance. But we are in a uptrend on the S&P 500, and we're simply just a matter of waiting now for a close above. Just to repeat myself, 3230, a confirmed close above it. To get a buy signal, we will buy, we will enter the market long, and our first target will be 3395. Traders, here we have the Standard Poor Index 200 cash. The trend is long. We can see here we have previous resistance, turns support through this bullish pin bar at 55.62. We have support here at 57.18. We have this resistance zone at 60.74 or thereabouts, and 61.82. From a price action perspective, you can see here we have these two bearish pin bars, which form the new event area, the new swing point, which was the catalyst for price capitulating back down to this support area here of 57.18. We then have this inside bar, multiple inside bar structure form here, which could very well be the catalyst for price to come back down to 75.18 or even down to 55.62. Now that is yet to play out, of course. Should that eventuate and we get a buy signal at this area here, or 55.62 or thereabouts, in the form of a bearish, bullish pin bar, or in fact a false break of this area here, and then we will be going long, and our first target obviously will be at 60.74, but ultimately it'll be 61.82 and beyond from there. So nothing to do, we're just waiting for a retrace. Right now price is obviously contained between essentially these two areas here, 55.62 and 60.74. We are simply waiting for a retrace back down to this area here, or even lower, so that we can buy on weakness and allow us to retarget 60.74 and then further on up the road to 61.82. Thank you.